In today's real estate video, we'll be discussing the housing market. As a warning, there hasn't been a housing market collapse. To illustrate this, here is a 5-year chart of Redfin property prices. The median sale price of a house in November was $408,732, up 3.7% from a year ago. In my opinion, this does not constitute a housing market crash, but that is just my opinion. Let's zoom in with a 1-year chart so you can see the month-to-month action, since the previous month's decrease in home prices was expected due to seasonality, with prices falling by $5,091 or 1.4%. The major institutions did not think that this would occur, but to me, it just made sense. And in today's real estate video, I want to share this with you. I won't go into detail about the US median house price that I just gave you, so let's see what the comments have to say. I have faith in 99% of the viewers, but that 1% is all that matters. I'll prepare for the worst, but hope for the best, so let's move on to the housing inventory. This is a chart that spans 3 years. Here's a 5-year chart showing how many more homes were for sale prior to the pandemic. At the same time, in 2018 or 2019, there were over 2 million homes listed for sale. At this point, there are less than 1.2 million homes. If you're rooting for a housing market crash, like you really want it to happen, the number of homes for sale is down by 7.8% month-over-month and down by 4%, meaning there are fewer sellers. This is not good news for you. In fact, it's very bad news because in order for prices to drop, there must be more sellers than buyers. Ideally, this would result in a fire sale style situation, but that isn't the case. There are currently fewer sellers than there were a year ago, and there are even fewer sellers than there were a month ago. In addition, there's another problem. Mortgage interest rates are declining. The average interest rate on a 30-year fix hit 8% in October, quickly dropping to 7%, and now it is below 7%. Okay, so here's the problem. Like I just mentioned, if you want a housing MK crash, you either want more sellers or fewer buyers, ideally. You would want both of those outcomes, but falling mortgage rates will boost demand because they make homes more accessible, enabling more people to purchase them, which increases demand. Right now, I'm not sure if you've watched my Federal Reserve movies, but if not, it's okay. They might not be as dry as the Federal Reserve itself, but to spare you the agony, here's what's going on. The Federal Reserve will no longer raise interest rates in this economic cycle. They've unofficially declared victory against inflation. In the Federal Reserve's summary of economic projections, they are saying that they expect to cut interest rates 3 times. So naturally, that's going to mean lower interest rates on most financial instruments, and that includes mortgages as well. The expectation is that interest rates on mortgages will fall to 5% to 6% in 2024. But you have to keep in mind that the Federal Reserve is expected to cut interest rates even further after next year, in 2025. Now I want to bring this question up because this is a very good question, and a lot of people are asking this. Could we ever see 3% mortgage interest rates again? My honest response is that I would not be surprised because the big financial institutions and the big players love easy money. Would that be inflationary? The answer is absolutely, but most people are going to be short-term minded. So they have the mentality about who cares about the long-term consequences, right? That'll be a problem for another day or for another generation. So I'm just being honest here about the situation. But don't get your hopes up for 3% mortgages next year in 2024, maybe in 2025, but in 2024, expect 5% to 6%. That's what you're going to see, and this will, yes, add inflationary pressure. Now moving on, I want you to look at the number of homes sold. So this is a 5-year chart. As you can see, it is at depressed levels. Now, look at the same time in prior years, which I've circled in red, and the red line is where we are today. The transaction volume is down significantly compared to prior years. This 5-year chart is good news for buyers. This shows the percentage of homes that are selling above list price. Here's the Redfin chart that we all love or hate. It shows us where people are leaving and where they're going. There is still a lot of outflow from California. 28.7% of homes are selling above list, so we are getting back into the normal range. But on the high end of normal, this number is trending down. New York and my home state of Illinois are also included there. I want to ask the Texans who are watching what's going on. Let's talk about housing market expectations for next year, starting with right now going into 2024 if you're looking to buy a home right now. It's a bad situation that's probably not a shocker to most people. Florida is still the top destination, but migration to Texas is declining. Because of higher interest rates and 40% higher home prices than before the pandemic, home affordability is still at record lows. This information comes from Zillow, so you can see how messed up things are when the average income household cannot afford the average home. The National Association of Realtors reports that 80% of U.S. metro areas have seen price increases year over year. I know what some people are thinking. They'll argue that since home affordability is at record lows, there's nowhere to go but up, meaning that the situation will have to improve from here. I don't deny that I agree with you that the situation will improve, but it won't happen overnight, and it will be a gradual process. Fannie Mae reports that 86% of Americans looking to buy homes in 2023 had to postpone that plan, which was a record high. It won't happen. Extremely low inventory levels will ensure that 2024 is still a seller's market. It won't be as robust as it was 2 years ago, but without a major increase. The reality is that millions of Americans will still not be able to afford or buy a home in 2024. This is a sad and honest fact, but that is the situation we will face. Perhaps things will improve in Q4 of 2024 or 2025, but that is still a long way off. Some people believe that the housing market crash will occur because the economy will collapse. I know that this is a reasonable argument, and it is not impossible, but the baseline scenario is that the economy will deteriorate. An economic depression or a Great Recession is unlikely. As you must know, the Federal Reserve is already talking about cutting interest rates if the economy starts falling apart more quickly than expected. Then what's the Federal Reserve going to do? They're going to cut interest rates even faster. So in that type of situation, the Federal Reserve would just flood the economy with easy money. So if you want my assessment, here it is. The Federal Reserve will cut interest rates in 2024. Mortgage interest rates will go down. This will slightly improve home affordability, but at the same time, that's going to increase demand. So I don't expect 2024 for the housing market to be that exciting. So no real estate crash and no price surges. So if you were looking for something more exciting, then I apologize for the boring truth. And I'm going to close with this. Of course, certain cities will have their unique set of circumstances. Of course, there's going to be outliers. So maybe you're in one of those cities and you will have an exciting 2024. But for most Americans, I would say don't count on it. So that's all for today. Please subscribe. I thank you for the support, and I wish you a very nice day. Take care.